Good afternoon. This is Keith Brown in Moultrie, Georgia with some cash commodity commentary. The markets are awaiting tomorrow's supply-demand numbers that come out at promptly 8:30 Eastern Time. Hard to say what these numbers are going to be, but they're certainly highly anticipated for the grains. But over to cotton, we're not looking for much change there. Maybe in the end, hopefully we'll get a 100,000 bale reduction in U.S. ending stocks, and that might keep our market still buoyed up here, as mysterious as it has been. As far as the world numbers, we shudder to think what could happen. As you know, the last 2 months, USDA came out and raised the global carryout roughly 2 million bales each month. So we're still staring at 76 million or thereabouts of a global carry. That's just way too much cotton. As a matter of fact, both somewhat tongue-in-cheek and somewhat literally speaking, we could actually skip next year and have plenty of cotton to go around. But nonetheless, we'll just see what these numbers are and see what they do mean for us. Over in the grains, we've had a pretty steep break in corn. The high was 8.49. We have dropped down to 7.25. And of course, we're waiting on the notion that maybe the corn crop could go up a little bit, hearing better yields, and maybe actually lowering or rather raising the carryout a little bit. So I think that a lot of that's dialed in. The crop, of course, is well over 50% harvested, both corn and beans. And there's some chatter that some of the yields, particularly on beans, are better in the Minnesota and the Dakotas. But that would be the case because, as you know, when the drought was at its peak, they were still getting rains along that Canadian border. So those boys should have made a good yield. Otherwise, we could see more acres abandonment, which could certainly offset any type of a yield and crop increase. So we'll just have to see on that. Beans have retreated back somewhat around the 1523 area. Hopefully their seasonal low was put in on October the 4th down there at 1504, just like we felt like corn's low was put in hopefully on the last crop report. So we'll have to see. Now that we're over 50% harvested, certainly the market could start to think about flattening out a little bit and finding a home for a lot of these products. Wheat, of course, continues to stay a little strong today based on the drought in South America, rather in Australia, and the notion that we're still unsure of the Russian numbers. So Russia in a couple of months could certainly come in here and get out of the wheat market as far as an export, and that would certainly help wheat prices. So again, we're just sort of waiting to see what the government says what they think we have as far as grain supplies and the size of the crop, and we'll just have to go from there. Fuel was up some today because of the weaker dollar, and Europe continues to really get in trouble. We really think this. We're going to do a little talk on it later on, but the European Union is probably close to really breaking up. It may carry on after Christmas into the first of the year, but definitely time has run out. The piper is here to be paid, and I don't think the Greeks and the Spanish and the Italians and the Irish have the money to do it. So we'll see. If you have any questions or comments, of course, give us a call at 1-800-910-1910. Thanks for listening.